Assalamualaikum, we are from Group 1. We present about auditing revenues. And here is my team members. The first one is me, myself, Muhammad Zuhelmi bin Muhammad Zaid. And the next one is Muhammad Hazir Akimi bin Muhammad Rashid. And the third members is Lim Zhang Yang. And the last but not least of our team is Raja Hazim bin Raja Samsul Arifin. And the last team members is Nandi Sri, anak perempuan Sakaralingam. And I will discuss about the nature of revenues. And my name is Muhammad Zuhelmi bin Muhammad Zaid, and my matric numbers is 06DAT23F1057. Before we go detail about the nature of revenue, we need to learn about revenue cycle. What is mean by revenue cycle? Revenue cycle can be described as when we go to a retail shop and the customer will select the item, and then the customer will bring the item that has been selected to the cashier, and the cashier will scan the barcode at the counter. And when the item has been scanned, the system will calculate the total amount of the item that has been selected by the customer, and then it will be proceed by the payment method, whether is it cash or credit card. If it is cash, the cashier will receive a cash and give a change. But if by credit card, the cashier will swipe the card and charge the credit card. And whether the method is by cash or credit card, it will generate a receipt and give it to the customer. As you can see on the left side and the right side is an example of the receipt that will be generated by the at the counter. And next is the second example of revenue cycle, which is we start by the wholesale. When the customer visit our website, and then the customer will select an item and add to the cart, and next the customer will check out the item. When the item has been checked out, we will check the credit limit, whether is it exceed or within limit. If it exceed the limit, we will deny the order, and then if it is within the limit, we will inform the warehouse. And when we inform the warehouse, it will generate an sale invoice. We will send sale invoice to the warehouse, and then the warehouse will select the customer order, and then we will check the item that the customer order match or not on the warehouse. If it is not, we will repeat the first step, which is select customer order. If it is yes, we will attach a label to package which is delivery order. That's it. Okay, when you already understand about the revenue cycle, then we can proceed with nature of revenue related to the accounting standard. What is mean by nature of revenue? It can be defined as revenue is income arising to the cost of ordinary activities of entity based on MFRS 15. For example, the sale of goods, rendering of service, and rental. If you want to learn in easier way, I can give you one example. If you come to the smartphone shop, and then of course you will buy a phone, and then that is where the revenue come, because of that is the core of the entity. So to recognize revenue entity, the entity must apply 5-step model. Okay, the first one is the entity identify the contract with a customer. A contract is an agreement, either is it written, oral, or implied, that create enforceable right and obligation. The criteria for a contract is approved by both party. Right to goods or the service can be identified, payment can be identified, and then the contract has commercial substance. And the last one is probable. The entity will collect the consideration. For example, a company sign a contract to deliver 1,000 units of product at 10 ringgit each. And then the second step is to identify the performance obligation. Performance obligation is a promise to transfer a distinct good or a service to the customer. A goods or service is distinct if the customer can benefit from on its own and is separate identifiable from other promise. Contract may have one or multiple performance obligation. And for the third step is determine the transaction price. The transaction price is the amount of consideration the entity expect to be entitled to. Things to consider, the first one is fixed and variable amount. For example, if the phone price is 1,200 but a 200 rebate is offered, the transaction price is 1,000. And then the last but not least is to allocate the price to performance obligation. If multiple performance obligation exists, the transaction price must be allocated based on the stand-alone selling price of each obligation. And the last one, recognize revenue when the obligation are fulfilled. Revenue is recognized when the goods or service is transferred to the customer.
Hi, my name is Lim Zeng Yang. Today I will present about audit accession and accounting treatment. From the audit accession, the first one is accurate. Record revenue must be real and not fictitious. For example, if a company records sales that never happened, the accuracy accession is violated. The second is completeness. All sales transactions that happens must be recorded. For example, if a December sale was missed and only recorded in January, completeness is not achieved. But the third one is accuracy. Revenue must be recorded at the correct amount. For example, a sales worth 10,000 wrongly recorded as 1,000 with accuracy. The fourth is cut off. Revenue should be recorded in the correct accounting period. For example, goods shipped on 31st December must be recorded in December, not in January. And the last is presentation. Revenue must be properly classified and disclosed. For example, rental income wrongly included under sales revenue misstated presentation. From the accounting treatment, revenue recognizing when control of good or service transfer to customer. Payment stream decides whether it's cash or account receivable. Must disclose revenue recognition policies in note. For example, the company sells goods worth 5,000 and the customer pay immediately. So the cash increased 5,000 and the sales revenue increased the 5,000.
Hi, my name is Muhammad Aziz Akini, and today I will be presenting about accounting system and control activities related to revenues. First, it will be account receivable. It is important to have an account receivable to keep track of our customers' debt, so that bad debt could be prevented. Secondly, it will be billing and invoice. It's to track our payment, to make sure that every transaction is real and not fake. and made up by generate and manage customer invoice. Next, it will be revenue recognition to ensure that revenue is recorded according to accounting standard. Next, I will be talking about internal control. The first internal control is segregation of duties. It is important that revenue are not handled by a single person. It is important to avoid fraud. Next, we have authorization of sales and credit approval. Only authorized personnel can approve sales and transaction. It is important to prevent fake sales and prevent fraud from happening. Lastly, we have record every transaction. It is important to ensure that all transactions are real and not made up. A delivery note, for example, a delivery note signed by the customer as a proof that the transaction is real and the purchase are made. That's all.
Hi madam, my name is Nandisri Sankarlingam. My matrix number is 06D8023F1011. Today I'm going to present about audit evidence. They have 3 audit evidence. First, sufficiency. This means the auditor must gather enough evidence before making a conclusion. If the evidence is too little, the auditor cannot be confident that the revenue is correct. For example, the auditor will check several documents like sales invoice, receipts, and delivery notes to make sure the revenue record is complete and accurate. Second, relevance. Relevance means the evidence collected must be directly related to the audit objective. The auditor must choose evidence that can really support the revenue assertions. For example, to confirm sales are recorded in the correct period, the auditor will review invoice and delivery document with the right dates. And the last one will be reliability. Reliability is about whether the evidence can be trusted. Evidence from outside parties is more reliable compared to information only prepared inside the company. For instance, customer confirmation or official bank documents are stronger proof than just internal spreadsheets. That's all from me. Thank you.
Assalamualaikum, my name is Raja Hazim and today I'm going to talk about audit procedure. So firstly, what is an audit procedure? Audit procedure is a series of methods that an auditor uses to obtain audit evidence, which then he or she can use to form a fair and true opinion of the financial statement. So we are going to talk about 4 of this type of audit procedures and how they relate to the revenue transaction process in the company. So firstly, we have the observation audit procedure, where in this procedure you have to observe the sales and transaction process happening in real time in order to confirm that it does really occur and it is done correctly. Some example of evidence to evaluate in this procedure is the cash sales process and the dispatch process. The assertion that this procedure supports is the occurrence assertion. For the second one, we have the inspection audit procedure, where in this procedure, we have to examine and review all related documents that are related to the revenue transaction and make sure that it is all properly recorded and in compliance with the current law. Some evidence to evaluate in this procedure is the sales invoice, the delivery orders, and the credit notes. Basically, any source documents involved in the transaction process. The assertions that this procedure support is the presentation assertion. For the third one, you have the confirmation audit procedure, where you have to verify with any related external parties involved with the transaction that the transaction did really occur and exist. Some example of evidence to evaluate is the any type of written confirmation, letters or emails, or any, as long as it is written. The assertion that this procedure support is the occurrence and cut off assertion. And lastly, we have the recalculation audit procedure, where in this procedure you have to double check and recalculate basically any figure involved in the evidence to make sure that all figures are recorded at their proper amount and all information are correct. Some evidence to evaluate in this procedure is the auditor's recalculation sheets or the tick mark invoices, basically invoices that are already approved. The assertions that this procedure support is the accuracy assertion.